Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, August 31st, 2016, and they were not able to close the S&P green for the month of August. We went pretty much nowhere. We only closed, I think, down 1 point. But, the fact that they weren't able to kind of push it above there heading into the close, I think it would be a little bit early to say that it's concerning, but I'm going to show you some charts as far as, what looks very similar to the month that we, just closed. So 15-minute, this is a 5-minute chart here. You can see that the bulls came in again without any type of buy signals, even on the shortest term charts. Now, it's every one of these rallies up are coming down on bearish divergences, but we're getting these massive short covering rallies right near within the last 30-45 minutes. And the shorts cover, the algos go into a buyer mood, and we head higher, and we've seen that over and over where it's been selling throughout the entire day, followed by a 45-minute buy program, short covering, and we closed down 4 points, or 5 points. It's one of those things that I've been saying that this market has become very predictive as far as what is going to take place. And when it becomes very apparent to the majority, it usually means that whatever they're going to be expecting is going to be used against them, and most likely trap them, and we're going to get an aggressive move, and I think it's going to be to the downside, but we'll have to wait and see. So you can see right now that it made it up to the up to the 50% retracement from this high to this low. Pretty overbought right now, but if I just move to I want to move to a 15-minute chart and show you, hang on 1 second, 5 day, 15. Okay, so this is the interesting part about it was that we made it right up to the moving average on the with the bounce off the lows here. So we made it to the 50% retracement a little bit. They tried to peak above the moving average here and closed below it. And if they, push it up, let's say if the bulls can get it through this resistance area here, there's going to be a reaction trade, most likely to the 2176, possibly 2178 area. Now remember that they're also showing a gap, which I'm not really quite sure where the gap came from, because the S&P was the futures were down like maybe a point, but this is showing a fairly big gap down on it, and actually it's not. It looks looks a lot worse from here, but it's actually, here's the 2174, and you can see that it opened at the 2173. So anyway, that really is meaningless. I don't even know why I went through it, but in any case, there's a gap right here, and that's sitting at this 2174 level. Most likely they're going to fill it, because that's what the bears, they're very neat traders. So I would keep an eye on that area. If they get through that, then you just wait for this anywhere from the 2177, 2178. That's where I believe that they'll hold it down, and I do not believe that these are the lows. And I think once we start picking up momentum, there's going to be a lot of people running for that same exit, and it's most likely going to bottleneck. So I had mentioned in the morning notes, I said if the bears can push it through the 2170, the reaction trade is going to be down to 2160. Came pretty damn close to it. From there, we rallied it up. So like I said, if the bulls can push through the 2172, reaction trade most likely is coming up to 2174, 2178. If the bears push it through these lows, now that's where things are going to get interesting. And because they're going to break this triangle, and most likely the next support area is going to be down to the 2146, and it's going to happen in a very, very fast manner. So if it comes down here and they lose this support, Then the next support doesn't come all the way down until 2120 or 2116. So you can see there's just a lot of air underneath, so the bulls have to be perfect on this. So you can see we never even got into the extreme oversold levels. It seems like once it gets to the 9 or 10% that on the stochastics here, this is when they start rallying it. We know we have bearish divergences, but this is the one chart that I found pretty interesting today, and this is a monthly chart of the S&P. And I have these highlighted here because notice that we made, this candle went above this candle on a monthly basis and then closed pretty much even right where it opened. You can see here this monthly candle went above this above this candle's high, and we closed basically even. So it's the last time we saw this, the S&P dropped 300 points from the 2116 all the way down to the it came all the way down to the 1890. So it was a big drop. So are we going to get the same thing? It wouldn't surprise me. I'm almost expecting it, but in this market, it's it's tough to be to stamp anything with 100% certainty because it's. We just get the craziest things that trigger rallies, and we get the craziest thing that triggers sell-offs. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.